Okay, let's talk about aviation. We highlighted that in our factors to watch out for as well. Has the aviation sector hit an air pocket? Is the reality on crude plus the possibility that data is indicating that air traffic growth might be slowing down? Are all of those a bit of an overhang for the sector, which remember many see as a proxy consumption theme. Would these headwinds impact the outlook for the space? Let me first go across to my colleague Pranay, who joins in with some analysis that he has done, culling out data on the aviation sector trends to really lay ground of a discussion in aviation. Pranay, take it away.
Well, yes, it's no doubt that airlines are going to have a very tough time when they report their Q1 numbers. As you pointed out, look at Brent crude, which is, accounting for nearly 35% of their operating costs. That has rallied 11% so far this quarter, and year on year, that's up more than 22-23%. If you couple the impact of rupee, which is also depreciated nearly 5% this quarter, and year on year, that impact will be about 27%. Comparatively, the yields haven't been able to move up as much for a couple of reasons. One, obviously this happens with a lag effect, so they wait for these dynamics and only later on increase the fares, which have happened, that have partially impacted the May traffic numbers that you spoke about. Also, the fuel surcharge that has been levied has been rather recent, so therefore their margins are going to be under pressure in Q1 year on year, and also the earnings, the bottom line is going to be dented quite a bit. In fact, airlines like Jet may also report operational loss given the huge debt burden that they have. But talking a little bit more about this, Q1 is otherwise a very good quarter for them, not as strong as Q3, but it's a good one. The reason why 16.5% passenger traffic growth was seen in May appears to be lower than the usual 20% run rate that we are used to is because one, there's a high base. Secondly, the higher fares this time impacted the demand a little bit, and third, 16.5% is not really a bad number. That's in high teens because industry expectation is 18 to 20% for the year. So the underlying demand does remain strong, and as it is, 11.9 million passengers were flown in May. So that is a record high. So therefore, don't go purely by the growth number year on year. Also going forward, most of the brokerages are revising their estimates downwards when it comes to margin and earnings expectations because oil has remained at elevated levels. Q2 as it is a seasonally soft quarter. Also the industry capacity addition that we are seeing means that there is going to be more competitive fares and more discount and sales. It may not increase compared to what we've seen in recent years, but even if the trend remains same, then there is going to be severe pressure on the airlines, which is why if you look at the stock prices of Jet, Indigo as well as SpiceJet, they have clearly underperformed not just in this quarter but for the year compared to last year. And even brokerages, while having revised down their earnings expectations, are having a cautious stance at the moment because we are not seeing any change in the crude oil price or the rupee trajectory.
That is true, Pranay. Thanks for laying ground for the discussion that we are slated to have with two special guests, Dheeraj Mathur, who's partner and leader aerospace and defense at PwC, and Anshuman Deb, who's research analyst aviation at ICICI Securities. Gentlemen, it's great to have you on the show. Thanks very much for taking out the time. Dheeraj, in extension to what my colleague Pranay just spelt out in terms of the headwinds that the aviation sector is likely to face, how do you map how things are stacked up fundamentally for the space? One is of course with crude realities, but the second most important bit is about passenger traffic, which continue to grow at about an average 16.5%, but there are signs of a slowdown there.
So, I would tend to agree with your colleague at one point that when you're looking at the passenger traffic, you're looking at month-on-month growth, and you're saying that April was about 26% and May is about 16-odd%. What you have to understand is you have to look at the absolute numbers. Over 11 million passengers flew in May this year as compared to about 10 million last year. Now, it's the absolute numbers that are important, because the other aspect that we have to realize is that most of our airports are operating beyond capacity. So I would look at the capacity issue because I think it is very important. I think there was a recent news report that over 25 of the 50th busy airports of the country are have either exceeded their capacity or they are at capacity. And if you look at the peak hours, then probably all of them are beyond capacity. So I think what we're really looking at is also a capacity issue, because I think fundamentally the demand hasn't come down. Crude oil certainly has an impact, and I'll come back to that in a second. But I think this one airlines has added a fuel surcharge and so on, but I think the impact of that surcharge wouldn't have been felt in May. If at all it's going to be felt, it's going to be in June, July, because you also understand that most airlines have been running discount schemes where they were giving you a significant discount for early bookings. So I don't think the fuel issue has played such an important role in May. I think it's the absolute numbers, the base effect, which is more critical. The fact that we don't have capacities at our airports. Now, as far as the crude issue is concerned, certainly it's not trivial at all. ATF amounts to about 40% of operating costs, and we are already seeing that impact on operating margins. So it's the bottom line that's really going to get impact. I don't think the top line growth has slowed down, but certainly the bottom line will be impacted, and there are a number of issues there, whether ATF should be brought within the ambit of GST and so on to mitigate the impact on airlines, because they're operating in a competitive environment where margins are very thin.
Anshuman, morning. I want to get you in as well on the discussion. And what would you say poses a bigger challenge to aviation as a sector? Would you say it's the spiral up in crude prices and the fact that they can't really, or they're unable as an industry to pass on the entire burden onto customers and hike airfares?
Yeah, hi. So there are two elements in the cyclicity of an airline industry. So one is the cost part driven by crude and currency, and other is the capacity part. So currently we are in the adverse end of both of the elements, in the sense we have a adverse crude and currency movement, as well as we have a higher capacity induction. So I believe that currently, while crude is something which is beyond the control of the airlines, there has to be a reaction from the industry in terms of bringing on capacity. So barring one or two players, most of the players in Indian Airlines are undercapitalized, so they tend to suffer losses when your costs goes up. So there has to be a capacity response in terms of lower capacity addition, and which should help bring you yields, and which should help bring you profitability in years like FY19, where you have a very strong crude outlook. Having said that, over the long period of time, you will obviously have to add capacity, because India remains a very small flying population country, which is set to grow at around 12 crores of flying population. We will only grow one way upwards, but then there will be years where you will have a higher cost, and so dip in profitability, where there has to be a capacity response. Whenever this capacity response happens, you will see a dip in passenger number. I agree with your previous two guests, in the sense that the numbers in May should not be looked in isolation, because the capacity data should show that even the capacity growth would have been lower. So if you see the PLFs in May, barring Go Air and Jet Airways, most of the airlines have been able to maintain the PLFs. So that indicates that the overall capacity growth has also been lower in May. What will be good for the airlines is that if there is a transient capacity response in terms of lower capacity additions, or a delay in capacity additions, or maybe replacement additions than new additions, which can give a boost to the yields.
Dheeraj, let's talk about individual businesses. Some analysts point out the Jet Airways financial matrix are the weakest among listed carriers, Indigo and SpiceJet included, which is why Jet stock has halved in the last 6 months despite their announced strategy on cost rationalization. As its debt, it's likely to, perhaps, the debt levels are likely to increase, and that is perhaps another aspect which is concerning the markets. Do you think that Jet's numbers can deteriorate further? And I'm not talking about what this means from a stock perspective, because I know that's not your area of focus, but really from a business perspective, how do you compare Jet SpiceJet and Indigo?
Well, I mean, you know, this is an apples and oranges comparison because Jet is a full service carrier and the other two are low cost carriers. So it's not a fair and it's not a sort of a logically correct comparison. You need to compare Jet with the other full service carriers, and the low cost carrier should be compared in a separate category. Now, having said that, you know, I mean, I just wanted to add a couple of points to what I said earlier, which is relevant here as well. That, you know, as far as capacity is concerned, I was talking about airport capacity. There is also the airline capacity, which you know, my previous guest just alluded to. So now, in terms of adding aircrafts, I think all told, India has about 500 odd aircraft. Whereas, you know, Airbus and Boeing, they project about 1,700 to 2,000 being the requirement in the next 7 to 8 years. So when we are looking at, you know, a quarter or an annual performance, we have to look at we also keep the bigger picture in mind. You know, we are very badly underserved. Now, the mainstream carriers have just got into Udan. There is a huge potential that's going to get unleashed once Udan stabilizes, and then you'll have to look at the entire picture, because Udan is really going to connect the spokes to the hubs. Now, hub to hub, as I said earlier, most of the metro airports are already beyond capacity. So if we want to see an overall, you know, improvement in the sector, we really have to address the capacity issue at the airports, and the airlines individually need to look at their own fleet expansion programs, so that we can get a midterm to a long term perspective. Because in the short term we will have blips. You know, the crude will go up, the currency will depreciate. You know, these fluctuations will happen, and we should, you know, this is a capital intensive long term industry. I don't think a month to month comparison is really a very a realistic or a long term thing, unless there is something systemic that is spotted in the short term. But at this point of time, I don't see anything systemic other than the fact that taxation on ATF is very high. Airport infrastructure needs to be increased. These, I believe, are the two systemic issues that need to be addressed. Otherwise, the underlying demand, as I said, you know, we all know that we are highly underserved. There is a very strong demand. The economy is doing well. There is a very high correlation between the economy and air traffic. So, you know, and as connectivity improves, as Udan takes off, you know, we are only, you know, the fundamentals look good. There are just a couple of systemic issues that need to be addressed largely by the government.
Anshuman, before, you know, it's time to wind down the discussion, have to ask you about how to approach airline stocks. You know, given the underperformance that one has seen year to date, and even the largest or the strongest stock amongst those, that's IndiGlobe Aviation, that as well correcting quite a fair bit in the last month or so. What's your rating and target now, and what your pecking order would be amongst the 3 listed entities?
Yeah, so we remain positive. We remain positive on Indigo in considering it's the considering a long-term play, because in times of high cost where your profitability goes down, this company typically tends to increase market share based on their ability to bring in those capacities and the inability of certain other players to keep on adding capacity. So we remain positive on that. We will prefer Indigo over other players. Tactically, I think Q1 and Q2 will be a weak quarter, both on terms of seasonality and in terms of cost outlook. So tactically, post Q2, based on the corrections that we have seen, we might reconsider entering in the plays like Spice and Jet.
Okay, gentlemen, thanks very much for taking out the time to speak with us to outline how the aviation sector is stacking up from an investment standpoint. We really appreciate your insights.